Hi everybody, I'm back again with one more video on the stock fund. Today we'll discuss about dividends. I will try to cover what are the key aspects of dividend. Should you buy a stock just for dividend or not? First of all, what is a dividend? Whenever a company gets profit, either company can reinvest the money or they can give portion of that money to the investor in that company. So dividend is a tool with which companies provide the return to the investors in the form of dividend. So this will be reduced. Whatever the profit is there, out of that some money they will take out and give it to the investor. So generally, whenever the company starts paying dividend, they will continue that practice, even though it's not mandatory. A company can stop paying dividend at any point of time if they want. The company is not making money. If the company financial situation is not good, they can stop paying dividend. There is nothing is stopping the company from paying dividend. But generally, companies will try to continue as a good business practice. Otherwise, what will happen? People may think something is wrong with the company. So, the company which is consistently paying, if they are not going to pay suddenly, then automatically there will be things that people will think, okay, negatively about this stock. That's why it's a good business practice. Some companies whichever pays, they will continue. But many companies are there in market which never pays dividend. Right? Many banks are there, they never pay dividend. Most of the IT companies, pharmaceutical companies, and FMCGs, they generally try to pay dividend. So, but it's not a mandate that a company has to pay dividend. So, company to company, the policy will vary. First of all, how dividend is calculated? One thing you need to understand is dividend is not calculated on the market price. It is always calculated on the face value. What is the face value? Face value is nothing but on the books. What is the share value? Generally in India, face value of a company is 10 rupees, 10 INR. But some companies, when they do a split or bonus, automatically the face value will keep on reducing. So, for example, if we talk about TCS, the current market price is 26.33 INR, but the face value is just 1. So, face value has nothing to do with the market price. So, this is just for the booking purpose. To find out the book value, this will be created. Other key aspect we need to understand is what are the types of dividends are there. Generally, there are three types of dividends: interim dividend, final dividend, and special dividend. What is interim dividend? Generally, companies, if they announce dividend even before the board meeting, even before the result, then it will be interim dividend. So the interim dividend, what they will do, they will announce and later they will take the shareholders approval. So many companies in between they will announce the dividend even before the actual general meeting. So that is the interim dividend. What is the final dividend? Final dividend is nothing but at the end of the year, once they close the book, they will look at the profit. Based on that, they will announce how much dividend they can give. That will be the final dividend. So interim dividend can be multiple, but final dividend will be only one. That will be at the end of the year. What is special dividend? Special dividend is based on the occasion. Companies will give amount of as a form of dividend. So generally, special dividend will be much higher than normal interim or final dividend. So companies, in order to celebrate maybe a special anniversary or maybe some merger acquisition or anything, whenever company says they want to celebrate with the investors, they will go for the special dividend. I will show all this with one of the examples once we understand the concept. This is the key aspect we need to see. Ex-dividend date versus record date. Even before that, what are the four dates I want to explain is, first is about announcement date. Announcement date is the date is nothing but on which day company is making announcement. For example, a company is making announcement on 24th October, right? So a company says, okay, I am going to give dividend of 20 rupees per stock. 20 rupees per stock. And I am announcing this on the 24th October. So what does that mean? Whoever are holding on 24th October, will they get the dividend? No. In order to find the eligibility, who will get the dividend, the date is noted as record date. What is the record date? Record date is the date on which, if you are having the share, you are going to get the dividend. So don't get confused. Record date, ex-dividend date, and cum dividend date. What are the three major differences are there? First of all, I will tell ex-dividend date. Ex-dividend date is the date on which the share price will observe that the amount is paid. It's simple. The company is making 100 rupees profit, right? And you are saying that out of this 100, I will pay 20 rupees as dividend. So now how much is left to the company? 80. If company cash position is reducing, or company value assets are reducing, automatically what will happen? Automatically the company value will go down. So that will be reflected in the stock price. When that will happen? That will be happening in the ex-dividend date, right? So that is I am showing with the T. Next, so generally what will happen? Whenever if you are selling a stock, for example, whenever you are selling a stock and other person buying the stock, it will take 1 day to get it reflected in your account. Suppose, for example, if you are, let's say, company saying that 31st is the record date. If 31st is the record date, till how long I need to hold? Do I need to hold till 30th end? No. Even if you do to hold one business day before, that means if you are holding the stock in your account on 29th end, that means on the 30th also it will be with you, right? So if somebody who, suppose if a company make announcement on 24th, anybody buys the stock from 24th to 29th, they are going to get the dividend. The last date on which you can buy is cum dividend date. What is the ex-dividend date? The date on which the price will be observing the dividend payout. So automatically the stock price will be adjusted, it will be reduced because dividend is paid, company's cash is reducing. And the record date is the date on which in the books your name should be there. After that, if you want to sell, it's okay. But on the record date, if it is there on your name, then only you are eligible. So simple rule is, so if it is a company saying that record date is 31st, you need to have on your name on the 30th. So on the 30th morning, once the trading opens, automatically the stock price will be reducing. If you want to sell at that point of time, no issues, you can go ahead and sell, you will get the dividend. Otherwise, you can able to hold and you can continue, it's up to you. But the last date on which you need to hold is 29th AM. So at the end of 29th, if you are still holding it, on 30th it will be reflecting on your name. So as even though if you are selling the stock, it will take 1 day for it to go to the person who is buying, right? That's the reason why ex-dividend date will be always 1 day less than the record date. We are talking about 1 day means one business day, right? We are not considering the holidays in between. Similarly, cum dividend date is 1 day before ex-dividend. So what are the key takeaways? Whenever a stock dividend is paid, automatically the stock price will reflect that. Stock price will fall the ex-dividend day. So market is what is doing? It's effectively adjusting the stock price to lower the value of the company because the company is losing its value. Why? Because some amount of money is going out of the company. So it's not a negative thing, but Stock need to reflect every activity, right? The price will be reflected accordingly. So one more key aspect, so many people what they will do whenever a company says I am announcing a big dividend, 20 rupees, 30 rupees, they will go and buy and immediately try to sell after the ex-dividend date. See, what is the advantage of that? Whatever the dividend you are getting, that is anyway getting absorbed in the on the ex-dividend date that is reducing. So you are not going to make too much of money out of it. Sometimes the stocks will lose much more than what they are paying dividend. Sometimes it will be at the same range or maybe 1 to 3 rupees extra, but there won't be a substantial return just based on the dividend. Just a corporate action, that's it. So don't buy a stock just for dividend. If you believe a stock is good, then go ahead and buy. But just buying a stock for dividend is advisable, not advisable for the investor. So these are the some of the key aspects I wanted to tell. Let me show with you some of the stocks actual data so that you will understand better. So TCS, first of all, I want to show the types of dividend here. So TCS 2673, and you can see interim dividend, right? Multiple interim dividends are there. You can see special dividend. Look at the final dividend that they announced in the last year, April 6th, because that is the end of the closing of the year of 2019. Right? Sorry, this is announced on the 12th, sorry. The effective day was 4th June. So that means even though they announced on 12th, you it is the effective date. What is the effective date? There is a ex-dividend date is on the 6th, 4th June. So you have a lot of time. Need not go ahead and buy just for the sake of dividend. If you want to buy for dividend also, you can wait for the time till June 4th. Anytime you will buy, automatically you are going to get the dividend. What else? Apart from that, let me show and Vedanta how what happened on the fire. So Vedanta, what they have done, they have announced the dividend here. Vedanta on October 24th, they announced dividend of 9.5 rupees. Now let me show you what happened with it. So look at this. Let me take 1 week. On 24th they announced. So that means actually it was on the weekend. So if somebody was holding on 23rd, means 104.1. On 26th it is when it started around 106.5. So suppose somebody has bought 106 or 103 whatever from 26 to 27 because the ex-dividend date was on 28th. Look at this. Ex-dividend date is on 28th, 9.5 rupees. The percentage on the face value, so 9.5 rupees. So what happened? It has gone down from 1 or 2.5 to almost 95 intraday, then little bit up and down, and after that it stabilized around 95. If somebody has bought at this point of time, maybe immediately after the dividend is announced, would have lost almost 10 rupees. You would have lost maybe around 1 rupee, or you would have been breaking. But whereas if some person has bought here, maybe 1 2 rupees profit, but still there will be brokerage, etc. will be there. So you can see clearly just the dividend is not a tool for you to buy a stock. If you think a stock is good, fundamentally or technically, whichever method you follow, then you can buy. Don't just buy for the sake of a company giving dividend. The market will automatically discount that and will reduce the price. So, and also one more key aspect will be there will be tax implications, right? You need to pay tax on the dividend that will be more than the what is the return you are going to get in the normal capital market. So these are some of the concepts I wanted to explain. I want to inform one more thing. I recently posted a course in Udemy and the introduction to futures and options. I try to cover all the basic concepts related to futures and options. I have given the link in the description. You can go and subscribe if you can go and buy it if you are interested. Otherwise, if you just want to follow more stock founder, then simply follow this channel. At least post if you want to know any specific topic or concept. I will try to make a video on that. So next week, next time I'm going to make a video on bonus share, how it will impact. I will try to do both bonus and stock split at this point of time. And I will try to explain is it really going to help or not, the bonus and stock split. Till then, have a good time. Happy learning. Bye bye.